So let's talk about 3 ways CD holders lose a ton of money every year. And you know what? At the end, we're going to show you how you can avoid these landmines. And if you're already, experiencing these kinds of losses, we're going to show you how to stop them cold with one of our CD rescue plans. Now, if you have a certificate of deposit, you're not alone. There's a lot of people out there that have them. In fact, there's like $14 trillion in U.S. banks today. So that would be like all 300 million of us having about $50,000 each in the bank. And much of that money is held in the CDs that the banks offer. Now, all of that, bankrate.com says that the average 1-year CD is only paying 27 basis points. That's like 1/3%. And if you don't mind holding your money, holding your money for a longer period, they'll give you 1%. Now, a large percentage of the money that are in CDs has been put there by retirees, in particular seniors, for their income. Just a few years ago, $100,000 would have afforded a senior or any retiree over $4,000 a year in income. Today, though, that same $100,000 will only give them $270 per year, or a little more than $20 a month. That's a 97% drop in their income. It's pretty staggering. And that's a substantial loss for anybody. And this is the first and foremost way these people lose money in CDs every year. Another way is that people put money in the certificate of deposit hoping that it will grow adequately for their future and oftentimes for their retirement income when they retire. So here's what I want you to do to show you the magnitude of this. Let's take the same $100,000 that we've been talking about, and we're going to use a formula called the Rule of 72, which simply shows us how long it will take our money to double depending upon what kind of rate of return we're getting. Let's say we're getting 6% on the money. Well, that means our money's going to double in 12 years. But look and see what happens. Even if you have a 5-year CD at 1%, it's going to take that money 72 years to double. So let's just say I'm 50, right? And so I put the money in a CD. I will be 122 years of age before the money will double. And just for fun, let's take the 27 basis points 1-year CD and see how that would look. Ready? 250 years to double. And that means that not even my children's children would be able to enjoy any of that money for retirement. Now, third way people lose money is not so much the CD holder themselves, but their family. There's a lot of Americans that put money in CDs to kind of pass on to their heirs when they die. But oftentimes they put the money in there many years before they actually die. Let's say one has $100,000 in a CD to leave to their loved ones, and they're only age 70 right now, but they don't die until they're age 82. Well, with current CD rates, that $100,000 would only be $112,682.47. But if he had just repositioned that money into another account that was just as safe, that was paying 6%, by the time he died, the family would get $200,000. And I'm going to guarantee you, they don't care if it comes from the bank or any other financial institution. Here's what I mean. Would they rather take $112,000 from the bank or $200,000 from another kind of situation? So let's review this now. So here's what happens with these CDs. 97% drop in income. It takes between 72 and 250 years for our money to double, and a 50% loss to our heirs if we just keep it in a CD. Wow, that is staggering. But we said we'd show you, how to do something about this. And here's what you do. You just simply reposition, leverage, and relax into one of our CD rescue plans. And the best news, it doesn't even cost you anything, not even a penny, to stop losing so much money. Here's what we mean. Let's just say you had like a ton of money in your left pocket and you saw that you were losing it. How long would it take for you to take the money out of that left pocket and put it into your right pocket that was secure and you weren't losing anything? Let's kind of look at it another way. Let's say you have a 1-year CD with Wells Fargo and you're getting 27 basis points. And so the bank manager approaches you and says, you know what, you're such a loyal customer. Here's what we're going to do. We'd like to offer you one of our new enhanced CDs. And here's what you're going to get with it. You know that $270 you were getting in income a year? We're going to immediately bump that up to $4,600. And you know that $100,000 is going to take 72 years to double. We're going to guarantee that that money will double in 11.5 years. Are you happy? I am. And then finally, the $100,000 that you had sitting there for your family, we're going to guarantee immediately for that $100,000 to become $200,000, and we're going to give it to your heirs tax-free. So here's the question. How long do you think it would take you to either keep your current CD or take one of the new enhanced ones that Wells Fargo is offering? And by the way, would you care what they called it? What if they didn't call it the CD? Would it matter? Or would you just want to take the benefits from it? Well, unfortunately, Wells Fargo doesn't offer this kind of an enhanced CD, neither does Bank of America, Chase, or any other bank or credit union. But there are 47 other financial institutions that will offer you that deal every day, including today. And they're just as financially strong, if not stronger, but really what's important, they're just as safe. So you know what, if you're currently experiencing the kind of financial frustration that comes with these historically low interest rates and what it's costing you and your family every year, why not just simply reposition and leverage those funds and sit back and relax knowing that the money is doing what you intended it to do in the first place for your income, for your growth, and for the legacy of your family. So we're here to help you. You know, if you need or you'd like our assistance in implementing one of our CD rescue plans, just click on the link and we're going to provide you with whatever assistance you need so you can just simply reposition, leverage, and relax.